Hello everyone and welcome back to a new video. Now I'm actually a recent college graduate. Luckily for me, I don't have any student debt, but 74% of college graduates do come out with student debt. There's over $1.56 trillion in student debt in the United States, broken up between I think 45 million graduates, which ends up coming out to about $35,000 a student. Isn't that insane? And you know what's actually more insane is that Americans owe $500 million, with a B, $500 million more dollars in student loan debt than credit card debt. What? Insane, I know, but the main reason why I'm making this video is because most people go to college, get student loans, graduate college, and then really don't know what to do at this point. They don't know when to start paying, how to start paying, maybe ways around it, etc., etc., etc. And the sad part is that it just keeps people going down this rabbit hole of never paying off their student loans, and they're just borrowing more money, and it's just terrible. And I do want to say that this is not for everyone, but like 14.8% of student loans are delinquent, which means like they're not really being paid. So today I just want to take a few minutes to fully break down student loans, and more specifically, how to pay those suckers off ASAP. All right, so let's start basic. Now there's two types of student loans. The first one being a federal student loan, which essentially just means it's originated by the government, and the government is the one funding your student loan. I know we're dropping crazy facts on this channel. You should subscribe. But the second type of student loans is actually private student loans. And these are going to be loans that are granted by bigger banks or by credit unions, state agencies, maybe even the school you went to, etc., etc. The main difference between the two student loans, besides obviously where the funds come from, is actually the guidelines and restrictions that each have. So for example, a federal student loan always has a fixed interest rate and a fixed repayment plan. Whereas private loans are the exact opposite. You never really know. Every single loan can be different depending on the terms, what you agreed to, who you went through, all sorts of things like that. And I do want to say that the majority of student loans are actually going to be private student loans. So that's what I want to talk about mainly today. But before I actually talk about how to pay these student loans off ASAP, I want to give you a complete full breakdown of the two so you're a little more informed. All right, so federal student loans. Now, you're not going to be paying on these loans while you're in school, okay? They have, like I said, fixed interest rates, and they also offer subsidized loans where the government basically pays your interest while you're still somewhat in school. You can kind of be like a part-time student and they'll pay for your interest, which is cool. You actually don't need a credit check unless you're getting like a plus loan or something like that. You don't need a cosigner for these. Interest is usually tax deductible, which is huge. And it also offers a vast majority of like repayment options, forbearance, deferments. I've talked about that in a previous video, but you've got those options as well. There's forgiveness programs, and you can even consolidate into a direct loan with one of these. Now, private student loans, on the other hand, are going to have variable interest rates, and I've actually seen them up to like 18%, which are insane. You can actually be made to pay these while you're still in school, which is brutal. All right, you might actually need credit for this though, so they're a little bit maybe tougher to qualify for. You also might need a cosigner sometimes, or like a co-borrower. And the interest might not, I'm not going to say guarantee, but it might not be tax deductible on one of these. And repayment programs and like forbearance, deferments, and all that kind of stuff, they are offered, but it's very limited with a private loan. And it's about 99% of the time, I want to say, is that these do not have forgiveness programs. And if you're sitting there going like, Shawn, why are you telling me these things? I really don't care. I just want to get my student loans paid for. I don't even know what I got. It's important to know because you actually want to look up what kind of student loan that you have, or if you're planning on getting student loans and you're actually not in college yet, or you haven't borrowed money yet, then it's good to know the two and actually decide on which one you want to go, because that actually changes your strategy a ton for paying off your student loans. For example, if you have a federal student loan, you might not even ever need to pay that sucker back. So like teachers, on one hand, teachers, if you teach for 5 consecutive years in a low income community, so like the parents of the kids you're teaching are like just low income families, if you're doing that for 5 years, you can actually get your loans forgiven. It's like between $5,000 to $17,000 of your loan just poof, disappear. Now, private loans, on the other hand, again, are a little bit trickier and you want to actually pay those suckers off ASAP. So again, this is why it's important to actually figure out which ones you have. Do you have private or federal? And if you have federal, it's worth taking a little bit of time to research specifically the program you're in, specifically some guidelines for it. There's actually a few ways to get out of paying your federal loans, or even like maybe going on an income-based repayment plan or there's a lot of ways to kind of finesse your federal student loan. So definitely spend the time and research to actually figure out a good strategy for that. But again, most people have private student loans, which is what I want to focus on. So Shawn, how exactly do we pay off our student loans before we're like 50 years old? Well, I just want to say that I've seen every trick in the book. I mean, I've seen so many different strategies for paying off student loans or really just paying off debt in general. And I've got like 500 friends in student loan debt right now. I've seen about 500 credit reports from clients who have student loan debt. So while I don't personally have student loan debt, I've seen so many other people, I've seen so many other strategies. I know it works and I know it doesn't. Now, before we go over the best strategies for paying these suckers off though, I do want to break it down into two separate buckets. So bucket number one, you just got out of college, you're fresh out, you're having to start paying on your student loans, all right? You're like 22, 23 years old. I don't know, whatever you graduated, you're starting fresh on actually paying on your student loans. And bucket two is gonna be people who have been paying on their student loans for like 5 to 6 plus years. They've been out of college for 5 to 6, and they're just sick and tired of paying for their loans, and they're just like, these things are never going away. So those are the two buckets. But let's start with bucket number one here, the absolute best way to live student loan debt free when you get out of college is to prioritize, okay? Now what I mean by prioritize is that student loans, private student loans at least, typically come in, 2 to 5 different loans. So it's not usually one massive loan. You usually get, like I said, 2 to 5 different loans, all for different amounts, all with maybe different terms, all with different interest rates, all sorts of things. It doesn't matter though. You got $35K worth of student loan debt broken up in multiple different loans. What I want you to do is prioritize them, all right? Start with the smallest and littlest student loan, rank that guy at the bottom, and then just stack them up. The more expensive they get, the higher they get on your list, okay? I want you to prioritize them and then absolutely attack them from the bottom up. And a lot of people actually get this wrong. They like listen to Dave Ramsey or like they listen to all these like entrepreneur, rich dad, poor dad, whatever. And they're like, I've heard of this before. Well, most people aren't doing it correctly. What I mean by attack it is I want you to make the minimum monthly payment on all of your loans. Yes, even the smallest one. You want to make the minimum monthly payment on all of your loans at the first of the month, okay? And then as the month goes on, you start spending gas money and all this kind of stuff, whatever. Money's coming out of your accounts. And then at the end of the month, before the first of the next month, I want you to drop more money on that smallest loan. So you're essentially paying twice on this student loan. You're not like paying a lot up front on this student loan and then making the minimum payments on it. No, that's not how you live your life because you don't know what you're gonna need that month for expenses and blah, 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 and blah, 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 blah. So what I recommend, pay the minimum monthly payments on all of your loans on the first of the month. Pay your daily expenses, your rent, your whatever, blah, 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 all your food and stuff. And then once you get to the end of the month, once you have a little bit leftover money from your pay, like let's call it, an extra 50, 100, 200 bucks, right? You still want to have some money saved up. You don't want to like run your accounts dry. But let's say you got an extra 50 to 100 bucks, throw it at that smallest loan. That is how you actually attack your smallest loan, okay? And you're gonna be paying your loan off way sooner for two reasons. Obviously, the first one is because, you're throwing more money at it. But the second one is because you're saving so much money in interest. And I've said this so many times in my lending videos. I'm a mortgage lender in Arizona, if you didn't know. So I see this stuff all the time. I'm in this stuff all the time. And the biggest thing that I always say is the amount of interest that you pay on a loan is not usually your rate. It doesn't really matter to some extent of what your rate is. It really matters the term or the length of that loan. I will take a 12% interest rate on a loan if it had a 5-year term versus a 5% interest rate on a 30-year term. The savings are absolutely insane. I do not have time in this video to actually go over it. You just got to take my word for it. And another thing really quick is the average income of a undergraduate student is about $54,000 in the United States. So you should be able to absolutely crush your student loan debt. So if you're fresh out of college and you're like, I want to get rid of these student loans ASAP, then you need to prioritize. And you also probably shouldn't be adding your avocado to your Chipotle burritos all the time. save a little bit of extra money, and then absolutely attack that smallest loan. Avocado, debt-free. Now that strategy can also apply to people who've been out of college for 5, 6, 7, 8, 9 years, but I've actually seen some strategies work so much better for these people, and that's what I want to talk about now. So people in bucket number 2. Now, again, this isn't going to be everyone, but for the most part, you're no longer making that $54,000 a year at that entry-level position straight out of college. You're probably making more like $63,000, maybe even $70,000 a year. Again, this varies a ton based on your career field, but you're going to be making more money. Now, that's great, right? But you probably got more expenses as well. You might be married, you might have a kid, you might have a mortgage payment. Your life is just a little bit more complicated than it was when you got out of college. So it's going to be really hard to actually just absolutely attack that smallest loan, right? Because it's just, you've got a bunch of debt. It's not just your student loan debt anymore. It's your car payment, it's your mortgage, it's your credit card, it's all this debt, and you've like, man, I've got so much to take care of. I can't focus on these student loans right now. Like, I just got to make the minimums on those, and I got to take care of this other debt. So for people in bucket number 2, I want you to consolidate your debt. This strategy actually works a ton. I'm talking using something like a PLOC or a HELOC. I'll talk about them in a little bit, but essentially, and I know I'm going to lose a lot of people here, so please bear with me, but think of it like, taking all of your debt, putting it into one, right? You're consolidating it all into one. Think of it like one massive credit card. So you've got your mortgage on there, your car payment, your student loans, you got all this stuff on one credit card, okay? You got this one credit card, and every single penny you make that month from your job, 100% of it goes towards paying this credit card off. And again, bear with me, but let's say your total debt from all of these things on this imaginary credit card equals $300,000, right? It's a big chunk of debt. You've got a lot of stuff in there. No worries though, because let's say you make $10,000 a month. Right as you get that paycheck on the first of the month, it goes 100% towards your debt. So now you owe $290,000 in total debt. Again, bear with me, but your interest calculated on $290,000 worth of debt is actually less than $300,000 worth of debt. Now, again, it's not crazy, it's only a small percentage, but every little penny counts. If you've seen an amortization schedule, you'll know what I'm talking about. If you give like an extra $1, if you pay an extra $1 on a monthly payment on any type of loan, it's gonna change everything. You're gonna pay it off sooner, save money, all this kind of good stuff. So every penny counts. Calculating that interest based on $290K versus $300K is gonna do wonders for you. And people are probably sitting there going, Shawn, what are you talking about? I can't take 10 grand and throw it all at my debt. Like what? How am I gonna pay for anything? I know. Okay, so think of it like this. On the first of the month, you owe $300,000. Well, you actually got paid that day for 10 grand. So it goes towards that card. Now you owe $290,000. But you still gotta pay for your gas that month and your groceries and whatever else you wanna buy. So then your debt starts coming back up. You now no longer owe $290K, but after about a week or two, now you owe about $293K, right? Because you're spending that money. You're spending money on your gas, your groceries, your avocado. So by the end of the month, you might be back up to, let's call it $296,000 worth of debt. Now, if you're all the way back up to $300,000, then you should just stop watching this video, because that means you're spending 100% of your income every single month, and you will not survive. Like literally, you're probably not gonna live very long. But in most cases, you're gonna owe less, right? Which is great. Now, a lot of people at this point say, well, Shawn, what's the difference in getting set up with this HELOC or PLOC? Like that's basically what I do. I make my debt payments every month and I pay for my avocado and all that other stuff. And then whatever's left over in the bank is called my savings. Like that's normal. And yeah, I get that. But this strategy that I'm telling you will save you so much more money because your interest is being calculated nightly. All right, so like I was mentioning earlier, your interest is calculated on day one for that $290,000 amount. Then day two, call it $290,000 and $500, and you're slowly paying money, right? You're slowly racking your debt back up. But again, your interest is being calculated based on how much you currently owe. Big emphasis on currently. I still feel like I didn't do a great job explaining this because most people find this stuff so confusing. But again, think about this imaginary credit card, right? You're gonna get charged based on how much you currently owe. Well, if you owe less at the beginning of the month, you're gonna get charged a lot less on that interest payment. And again, as you use it, you're gonna start charging more and more, but you're saving tons of money this way. You're saving tons and tons of money. Like literally what I was just saying about an amortization schedule. It's a little progress, it's a little bit of money, but you're saving a little bit of money every single day, every single day, every single day. It's a huge snowball effect to where once you're 8 years down the line, you're saving thousands, I mean, literally tens of thousands of dollars. I've seen people save tens of thousands of dollars and pay off their student loan debt and all their debt really in a much shorter time than what the term is on that loan. And again, this is with a PLOC, a personal line of credit, or the more popular options, what I recommend if you can, is a HELOC, a home equity line of credit. Now again, I do mortgages in Arizona, so I've done HELOCs for clients and basically consolidates debt all into your home. If you don't own a home, then you can't get a HELOC, you gotta go for a PLOC, personal line of credit. Obviously, amounts on a HELOC are much, much, much higher. If you wanna learn more about like this specific HELOC and how it kind of works, I've made a video on this channel previously. I'll leave it linked down below for you to kind of check it out. But again, this is how you consolidate your debt into one line of credit, this imaginary credit card. Not one big loan, because I've seen people do that. Interest rates on a massive personal loan is like 15 to 20. Do not do that. Do not go get a personal loan. I'm talking about a line of credit, this imaginary credit card. But that's really it. I mean, paying off student loan debt shouldn't be as hard or as stressful as it currently is. Problem is, most people are just not educated on this. They end up making their minimum payment if they even make a payment at all. And it's just this super long rabbit hole of paying off debt, and it just takes forever and no one's doing it effectively. Bottom line, you just gotta get ahead of your student loan debt, take the necessary steps to actually be in front of it, and you'll be good to go. Hopefully this video helped you. I will say that being student loan debt free, however you wanna say that, being debt free essentially is an amazing feeling. And again, it's totally worth not getting avocado on your Chipotle burrito. But if you enjoyed this video or learned something new, then please actually share this video with someone who's in your shoes, who you know has student loan debt and they need some help getting out of it. I'd really appreciate it if you could share this video. Also, like and subscribe on this video, or subscribe to this channel. I drop tons of great information that'll help you out with things like this. I love dropping financial knowledge every once in a while. Most people have no idea what's going on when it comes to debt or when it comes to other things. So I like to help out when I can. Oh, and I also made a video on how to actually buy a home when you are in student loan debt. So I'll leave that link down below as well. But again, I hope you enjoyed the video. Like, subscribe, all that good stuff. Drop a comment for me. And until next time, I will see you in the next video.